So my name again is Eric Patera, and I am the UI Program Supervisor, and I'm located in the Panhandle. And I've been auditing for approximately 17 years in this capacity. And so I have a lot of experience doing these topics. So I hope to share some of that knowledge with you guys. So we'll get going a little bit. So this is unemployment insurance tax. And we're going to go over a little bit of kind of the history of unemployment, the trust fund, covered employers, tax rates, some common entities, who are employees, corporate officers, independent contractors, a little bit on accountable plans, some due dates, the employer portal online filing, penalties, and some new hire reporting aspects of things. So we're going to do a little bit of that. And if you have questions in it, or you have questions on something else that we're not covering, let me know towards the end if they're not covered, but we'll try to answer it. I do ask that I can't answer anything specific about a case or any of that. So please don't ask that, but you can ask general questions and I can help kind of guide you through it. So no names, no employers in that. I appreciate it. So we'll continue going and go on. So first of all, the little bit of the history on this is it's all started back in the Great Depression when the stock market crashed and things kind of went awry in the United States for employers. The basic gist of all of it was the employers would have opportunities to actually build or start work. And unfortunately, in the process of a lot of unemployment, they would travel across the country and wouldn't be available when work did become available to build large buildings and everything else. And so the workforce just wasn't readily available to employers that depended upon that in their areas. And so the federal government decided to instill the Federal Unemployment Tax Act, or what we call FUTA, back in the 1930s. And when they did that, they actually created the State Unemployment Tax Act. But they did allow kind of the states to run their own program and kind of allow us to operate within our own laws, which is why each state is different a little bit. And we administer only the UI stuff in Idaho. So kind of what does it do? It protects workers against loss of wages during periods of involuntary unemployment anymore. It has changed a little bit from back to keep the workforce in the area to more of an economic stability in the areas that they're in and the homes that they are renting or providing for. So how are individuals eligible for unemployment insurance? They must meet both a monetary and a personal eligibility requirements to actually file a claim and actually get a benefit out from it. We're not going to talk a lot about that other than it does affect kind of how taxes and all of that work together in the process. This is in Idaho, it is an employer-based tax, and employers pay into the gross, or their growth from gross wages into the trust fund. And the only thing that get paid out of that trust fund are benefits going from into that if they meet those eligibility criteria. So what is our job as the UI compliance? We are actually, this is our mission statement. We do strive to ensure the integrity of the unemployment insurance fund. And that is everything from making sure wages are reported correctly, whether they're over-reported or under-reported. We are the people that kind of administer that so that our trust fund doesn't get underfunded in all of it. We have many people doing it. Part of it is claims investigators. They'll make sure people got benefits correctly, to making sure we actually have people that actually make sure that people that are giving benefits are doing it correctly. So we keep everything in that area. We have a central collections unit that basically start collecting and gathering funds that have been underreported or haven't, there's some discrepancy in the account, and they do that. Tax representatives do a little bit of that and make determinations on issues that come out, whether it be an obstructed benefit claim or in that. And they also kind of help audit a little bit, which is where I am at, is where UI tax examiners are. They're auditors. They just make sure that everybody's reporting correctly. We do this a lot by hoping to educate the employer-based as best we can, whether it be through an audit or through these kind of presentations. Yeah. So we go the extra mile as best we can with the ability we have. So what is covered employment? Basically, covered employment is an individual's entire services performed for wages under any contract of hire. So what does that mean? It basically means if you hire someone and you pay them wages for that, whether it be under covered, it's covered. It doesn't matter. Independent contractors actually fall under this, and so do kind of corporate officers. It's a broad scope. It covers basically everything. So we look at kind of what's going on, and there are exemptions for independent contractors if they meet the test, and which is narrowly defined. We also have a little law that says if it's covered for FUTA, it's covered for SUTA. It's basically what it says. It's not. So there are some federal laws that cover things, and so our law actually picks those up and covers them as well. So we are very standard to what the minimum requirements are. Idaho tries not to go above and beyond it very much, but we do adhere to that. There's one other thing I'd like to mention in this area is covered employment also includes what is covered in the state of Idaho, which basically has what state to report. So if a majority of their services are covered or performed in the state of Idaho, then they would be considered reportable to the state of Idaho and covered in Idaho. And then if you can't figure out where they're covered because you don't know where a majority of their services are, whether it's 50-50, 60-40, 40-60, in that it's kind of transient from time to time, then we would actually go to where's the base of operations come from? Where does their control actually lie? And then that would be the state that they would be required to be reported in. And then we actually look at if you can't figure that out because everything is transient in nature, whether it's a lot of trucking outfits fall into this and because their dispatch moves from time to time. But then we go back, if you can't figure it out, then report it in the state that which they live. And so that's how we see kind of covered employment a little bit in Idaho. And I just wanted to mention that. There's a good kind of flow chart in our employer handbook on our publications page. You can go find it out there if you have issues with it. And if not, call us up. We'll kind of help discuss it for you. So what do we call in covered employment? There's 3 or 4 different basic types of it. There's a general employer, an agricultural employer, and a domestic employer. And then there's a nonprofit, which we'll get to in a moment. So general employment is basically anybody paying $1,500 or more in a calendar quarter or the preceding calendar year. So if you're covered in, say, you pay someone $1,500 in this year, then in at least one calendar quarter, then you would be covered for this year and next year. And so it continues on and on like that until some changes that. And then we also have another way of covering it is anyone employing 1 or more people in 20 weeks or 20 different weeks of the calendar year will again cover them for both the current and the preceding year. So what does that mean? any one person. So one person can be working a half hour, 15 minutes in a week. That counts as 1 week. You could have 40 people working in 1 week, and that still only counts as 1 week. So you have to kind of look at it that way. And we help if you have questions on it. Again, let us know. Agricultural employers are a little different. And to be covered, they actually have to pay $20,000 or more in a calendar quarter, and then once they do that, they are covered in the current and preceding year, just like in general. Then, but they also have, if they employ 10 or more employees for some portion of 20 different weeks in the calendar year, then they become covered. It's a little more lenient in that, but that's the way the law is read. So domestic employment, so is an individual who pays, or an employer actually at this point, but is anyone who pays $1,000 or more in a calendar quarter, and they become covered in the current and preceding year. So what is domestic employment a little bit? It is if you have someone mowing the lawn, your landscaping, if you have babysitters, cooks in the home, then they would be considered domestic employment, and domestic employment is not considered for general employment. So we keep them kind of separate in that. And then we did have a nonprofit, which is in there. And nonprofits are basically, if you're a 501c3, you can be considered a nonprofit, and you actually have the ability to select kind of how you're going to be treated as either a cost reimbursement employer or an experience rated employer. And so we look at that, but they are covered from the first dollar paid. So they would be, once they pay someone, they are covered and have to report to us. In that, our tax rates for this year is 21% of the gross wages. So that is our lowest rate it can be in the year or in any year. And we right now are at that rate. And because to make a long story short, we actually adjusted our big calculation for our trust fund to help employers in 2024 to reduce it back down to the 1%. And in that, we base everything else off of this. So let's, in 2024, and I should mention that our rates aren't out for 2025 yet. They do come out in mid-December. So in that, but our positive rating class has 7 different classes, and they get calculated into each thing. And we'll kind of go over a little bit of it here in a minute, kind of how your rate is set. But if you fall into a reserve ratio of one of these classes, then that's where you get our things. And it's all math that does this. We don't have a kind of a choice in it. It's a matter of how you do it. But again, we'll get into a little bit of that. And remember that your notifications come out in mid-December. So pay attention to that, because you do need to update your rates for the following year. Because even though you might have a positive class, you might move up or down based on how the rest of the state goes. So you do need to make sure that you notify your payroll company, or put it into your QuickBooks to make sure that you're paying the right rate, whether it be more or less than the last year's rate, just so you don't get caught in us calling you up or sending you some fun letters to make that up. So our standard rate, if there's other than the regular reason that everything is calculated, you get our kind of standard detailed reasons, and you do have 14 days to protest anything that we kind of give out. If you think our math is wrong or something is going on, you do have that If we do find that it is correct, we usually just correct it. Otherwise, we go to an appeal hearing and you'd have to bring your evidence to support kind of why you think it's should be different in that. And we do give you all the numbers up here. So our tax rate components are in here. So basically our contribution rate is at this moment in time, it's at 0.8 of the full rate. And then our administrative reserve rate is actually at 0.17%. And then our workforce development fund rate is at 0.03% in all of it. And if there isn't an administrative reserve rate that appears, and it is all based on law, it's usually based on if our trust fund is mathematically healthy or not, it appears from time to time. And right now it is appearing, but if it isn't, the contribution rate is at 0.97%. And then our workforce development fund rate is actually still at 0.03% of the full rate. So how do you get it a little bit? You get our reserve balance, which is basically the taxes paid in to unemployment, and then less the benefit charges that have been paid out based on the wages of your account. And you have to be the chargeable employer to get those benefit charges, but if you are, then this is how that would work out. So you'd get a reserve balance in all of this, and then you would basically get an average annual taxable payroll, which is the last 4 completed fiscal years. And our fiscal year ends in June 30th, starts in July 1st, and it goes. So we calculate all this for like 2025. The fiscal year ended in June 30th of this year for the rate calculations for next year in all of it. Then on that, we take the reserve balance and divide that by the average taxable payroll to get that reserve ratio, which will put you into that classification in the list that we had before. And that's kind of how you get your rates in there. Just remember, this is usually it'll show the effective date and then the taxable wage rate and our wage base. So in the taxable wage base for this year is $53,500, which means basically for each individual, you'll pay taxes up to that amount. So anything exceeding that amount will not be taxable for us. Okay, all this is kind of explained in this second page that we give you in December. And basically that's your kind of the explanation of that top column of your tax rate. The experience factors used to determine the rate are explained right here. And so it goes, this whole page kind of walks you through exactly what we talked about a little bit in it. So you don't have to memorize it or any of that stuff. We actually send it to you in detail a little bit so you can help figure out what's going on. One thing I will mention is because tax rates, anything that is paid into the contribution rate is what is actually calculated. So it's not all the administrative reserve rate and the workforce development rate don't actually get added in when you do the taxes paid to the minus the less the benefits paid. So it's only the amount going in as a contribution rate is the amount that is actually placed into that. And then our standard reasons, if you get our standard rate, if you've been an experienced employer and you didn't pay by say September 30th, then we would, or if there was any delinquencies on your account and it wasn't paid by September 30th, you would actually go back from a positive rating to our standard rate. If you have a deficit rating, you're going to stay at the deficit rating, which means you're above our standard rate in it. And there's a couple other ones, no employees for 8 quarters. And there is a way to get back from a deficit rating. It says that third or fourth bullet down shows that if you pay more in unemployment contributions than we pay out in benefits each year for 4 years, and you have a deficit rating, there is a law out there that actually puts you back to our standard rate, and we'll start that calculation over again. So you can do all that. And that's about it. I'm not seeing it, but I guess is there any questions, Dave, or you want to bring up at this point for that, or?
Yeah, there are a couple of questions. So one of the questions, what is the reasoning behind collecting tax on business owners when they cannot collect unemployment?
So I guess business owners are, and we'll get a little bit into it. So there's corporate officers and there's owners of the business, which are the sole proprietors or partners in a partnership. So corporate, or we'll say owners in all of this, they are not to report wages, and we do not collect taxes on the owner's wages or earnings themselves. We only collect or tax the amounts to their employees at that point. So in that, now a corporate officer, which we'll get into a little bit, so I'll kind of dive it, is considered an employee and is required to report wages on it. And they are allowed to opt out, but we'll get into that a little deeper in detail. So here in a little bit, but okay. Yes, that's kind of the reason.
Right. Okay. Another one, are employers able to have multiple TPAs on file? For example, one TPA to submit the quarterly reports and payments, and another TPA to manage the unemployment claims and receive tax documents, tax rates, debit credits?
Yeah, actually, yes, you're allowed to have a lot of people doing multiple variations of all of those. So the best way to actually put people on is if you know what you can do is you can give them, they can go to put a user on the account or on the employer portal. They would go to add or select an employer. And by doing that, they would put in the account number, the FEIN, and a lot of times they can have a PIN, but if you give them a PIN, they have full, complete access to the account. You may or may not want that. But then if you don't give them the PIN, they can request the roles that they are going to administer everything from. And then the administrator on that employer's account can actually grant them access to do so. And there is a user guide on our employer portal that can help walk you through it, and we'll kind of go through a little bit later on in all of it. But yes, you are allowed to have people doing just address changes, looking at benefits, reporting for UI tax purposes. And so, yes.
Okay. 2 more questions. These notices sometimes don't get received in a timely fashion. Is there a way to receive electronically?
So at the moment, there is not. We are required to still manually mail them out, and we can, at a limited basis, be able to send at least a single copy to someone from time to time, because we can take a copy of that report from their archived file and send it to them if they don't believe they got it in that. Because if you didn't get it by getting towards the end of December, you might want to call us in that. But right now we don't have an easy generated way, because emailing is still with PII, we cannot do that. So we are trying to figure out a way to put it in the employer portal, but to just automatically go there, but we don't have that capability at this time either.
Okay. And the last question right now, how often are numbers appealed and found incorrect?
So not very often. There are things that happen when we have done like process changes or kind of changed how our computer is going or our mainframe, and they have made some incorrect things, and we do correct them when we do find those out. So they do, it is possible, and we do correct them when we do make those mistakes, because everything is, we want it to be correct for everybody out there.
Actually, just had another question come in. This should be a quick one to be able to answer. Using the online website, are employers able to make updates to their account, such as updating officers and or reporting acquisitions?
Well, you can't manually change your account without our eyes on it. So right now, the best way to do it, you can change some addresses, but we still review those to make sure it's a valid email address or a valid mailing address or physical address. In that, you can send us a message through the employer portal, and we would actually update that account, so you don't have to call us. You could just say, hey, we have this officer, we would need some information, like, and they may contact you back if you don't give enough information, like how much percentage ownership they have, or in all of that, just so we have their contact. But yes, you can at least send us a message and we will update the account in all of it. But we don't just let the accounts change without our eyes on it at this point in time. So is that
okay? That's it for now. Yep.
Okay. So we'll keep going. So who are employees at this point? Like I said, it was a very broad thing that anyone providing service or services in exchange for money, and it's broad in its scope, and so it basically covers everything. I mean, if service, some type of remuneration or wages are changed in hand, then they are covered for us. Who are employees in this? So statutory employees defined by law are actually corporate officers. Corporate officers are one. The others aren't really, they're maritime type events. And so they don't, we don't put them on here just because we don't have a lot of maritime in the state of Idaho. But the other ones are what we call common law employees. What this means is they didn't meet the exemption for an independent contractor. So who are they? Anyone that is, you have the right to direct and control in the performance of their work, and they don't have a business out there to do it. And so those could be your full-time employees, temporary, part-time, interns, probationary periods. A lot of times there's some misconceptions that people have in all of it. And there could be anything from they earned under $600. That is not a marker for whether they should be reported or not, or whether they're your employee or not. It's a matter of that's an IRS event that says that they met the independent contractor test, and that you don't have to report them because they're under $600 for their 1099. If they do not meet that independent contractor test, then they are covered in that. And we'll get into some of that in a little bit. But also working interviews are one of the misconceptions there, that you can have a working interview, because the moment you pay them for a service, they are covered and they are required to be reported to us. In that, let's see, they, so a lot of times they tell us when they want to work. Again, that's only one little tiny factor in a lot of different things. So it doesn't matter if they tell you when they want to work, or they're just, they just come in to help from time to time. In all of it, doesn't matter, they're still covered. So they have to meet some sort of an exemption, or that independent contractor test to do it. They control their hours is another one, very big in our world, that they said, oh, we didn't report them because they told us what hours they wanted to work. Unfortunately, doesn't meet any exemption out there, and they are required to be covered. They only came in once. That's a big one. They're high schoolers that came into work, and we allowed them to work. Still your employees, hosts in that. So are babysitters considered employees? Yeah, they can be, depending on who's paying them and how that is. That would be a domestic employment potentially in that. But they would again have to meet that $1,000 in a calendar quarter to potentially be your employee if you were a domestic employee or employer. So let's see. Okay, so independent contractors. So what is an independent contractor? These are the basic two tests. The worker must be free from your direction and control, and both behavior and means to do the work. What that behavior means is kind of how they do the work. What do you require of them? If you require a stepping stone, so to speak, in it, then you may be controlling their behavior. The means to do the work is kind of the tools and the location and all of that. If you can control that, then they're probably not meeting this test. And it's everything from ladders, desks, equipment, phones, all of it. And if they can't do their job without it, that could be considered part of it. And who supplies it, and do you have the right to control it? Then are they established in an independent trade, occupation, or business? And this is that second part of that test. They do have to meet both portions of it. We'll get into some of these factors in a minute, kind of the skill, integral, permanency of the relationship, investment, customarily engaged in a business or trade, and opportunities for a profit and loss, and some other factors we'll kind of discuss here in a minute because they're in here. So what is, when we're looking at it, what are skills that we look at? Does that worker perform routine tasks, or do they have little to no training in all of it? Yes, we do look at that and say, hey, wait, this is everybody can do this. So would that kind of indicate a potential for independent contractor? And I am going to back up just a split second from that to say no one test makes them an employee, and no one test makes them an independent contractor. So in all of this, we look at the whole itself. So we look at the skills and all those factors you just saw on this page, and I'll show those really quickly again to you. Is we look at all of these and how does this come together, and how is it logically or reasonably shown that they meet this, or are they economically dependent upon you as an employer for those services and those payments? And so we look at it, they do have to pass again the A and the B prong, which is the free from direction and control and established, but we do look at the established in a trade and all of it in each factor is a preponderance of evidence. Where does all the facts fall? So we look at, do they have licenses out there for skills? Did they have a lot of education to get to that skill? Is it marketable as a trade? Are they marketing as a trade? Do they have, contractors licenses or required licenses in the health and beauty industry or the barber and cosmetology industry? Do they have a contiguous license for a separate shop within a shop? Do they have the the skills necessary to advertise. Are they advertising? Are they exercising that, or is the employer actually controlling all of it to kind of say, hey, they may have a lot of education like a doctor, but the doctor's relying on the employer to actually get the work and the clients in all of it. We even look at kind of who does the client pay in all of this? Who are they required to pay in all of it? Does that worker have the right and the ability to collect that money from people? So we look at all of that just for the skill alone and kind of say, okay, how does it figure out for this factor in all of it? Then we continue on and we go, is the worker's services an integral part of the employer's business? If it's kind of like in a manufacturing setting, you know, is there again a stepping stone? If you take that piece out of the mix, is that is the employer's business going to fail because of it? Is it a primary source or service that the employer provides to their customers? Or is it something secondary in nature to what is going on with that employer's business? Some examples are bookkeeping services, may or may not be, depending on this business out there, or advertising in some regards. They use advertising services out there that could be a secondary services for most companies. And we look at all of it to see kind of where that ends and begins, and we put that together. And it's we do look at a couple other things like does the worker supervise employees of that employer's business? And if so, you know, we do kind of look at that, how integral are they in that? So let's see. I think we're good there. We actually look at the permanency of the relationship. So what does that mean? How long does that worker work for the employer? If they work a long time in that, it could be what we consider leaning in favor of an employee type status. We look at how is that relationship working from a day-to-day basis, not only in that, but then how on a week-to-week, a year-to-year, what does the contract say? Do they have a specific end date involved in all of it, where they're bidding for the jobs and all of that in it? And so we look at, is there just an open-ended relationship? If there's an open-ended relationship, this factor kind of would start to appear more as an employee than an independent contractor. If it's a job-by-job basis, we kind of look at it as an independent contractor type event. And so we continue on to what a worker's investment in facilities and equipment. This is kind of a complex one, but it also goes back up into the area above and into the means to do the job. But we also look at, you know, what does the worker bring to the table and what does the employer bring to the table? A lot of times the worker will bring some things, and I'm just using this as an example, but like in the construction industry, they bring probably a tool belt, measuring tape, and a hammer, and maybe a couple other little tools. So they bring something to the table, but on the whole, the employer brings all the saws and trailers and ladders and major pieces of equipment to move ground or supplies in all of that. And so we look at kind of what does each bring to the table and kind of evaluate kind of what's going on. If the worker is actually bringing a lot of those things to the table, that may be different. Do they have unreimbursed expenses, or does the employer reimburse them for those types of expenses? In a working setting like a manufacturing place or like an office setting, we would look at, you know, who is renting the building and the space that the worker is using in it. We kind of gather all that up and kind of see where and how all of that plays together a little bit. And do, in this case, is again, the worker dependent upon the employer for the equipment and what their facilities in that matter, in what they're doing. But we look at that and kind of go on, and then are they customarily engaged in an outside trade or business? So we kind of look at this, and again, this kind of looks at the general scope of what are they actually doing out there? Are they advertising? How are they actually engaging the public in a service for what they're doing? Or are they, again, dependent upon the employer because they're advertising and they're the ones actually going out and actively trying to get the clients and jobs out there? So we do look at that kind of. It's not about, again, because it appears that they're saying the same, but it's not. It's actually, how is the worker actually engaging the public out there? And then we look at the worker's opportunity for a profit and a loss. And I'm going to reiterate this a little bit. It's both a profit and a loss. How does that work for the employer, or for the employer and employee or worker in all of this? Does the worker have business related expenses? Or do they get bonding? Do they have insurances that would cover if something is damaged? You know, what are they bringing to the table? That investment in facilities and equipment crosses over into this one a little bit. And we look at all of that and say, okay, how, you know, if something gets damaged, how do they have that ability to, do they have to recoup that cost, or does the employer take it? What's going on in that? So we look at both that instinctual thing. If you're paying people by the hour, that's kind of an employee type event. There are industries and stuff that do that. So it's not always the case, but for the most part, we look at kind of what's going on, and does the worker have the ability to change that? Do they have that skill necessary to make, hey, a job just increased on me. Can I, you know, this is what'll happen if that happens. And do they have that ability? And so we look at all of that and kind of say, okay, what's going on? And are they, again, economically dependent upon that employer, or do they have that ability to make a profit and a loss? If they're employees, usually, while they might not have work available to work their hours, that's not a loss type event. It's more of there's not work available for them, and they can possibly go work somewhere else. Other factors that we would look at here are kind of what's going on. Again, who sets the rate of pay? How are they right? Do they have that right to determine hours or control the premises? Do they have the ability to hire subcontractors and kind of employees, so to speak, if they wanted to? Or do they have to get the permission from the employer in all of it? And we look at substance over form. What's truly going on behind the situation? So you might bring a contract to the table and it might say all these nice words and everything else, but then the reality is it might be going totally different than that, or it might be even stronger than that. So we look at kind of what's going on and why we have to address all of these factors, and looking at it in its entirety and not just as an individual factor on a case-by-case basis. So we look at it, we evaluate it. It takes us a little bit of time to do it because we want to be thorough and make sure we're making the right decision for the facts that are presented. So I guess that should be it on that one. Is there any questions that came up over that?
Yeah, there's two questions. One is in relationship to domestic babysitters. So a part-time, like part-time nanny, is that, and I think you mentioned $1,000 in a quarter, is that correct? That that a person would have to earn that or more before they would be considered an employee. I mean, that'd be one.
Yeah.
So
a part-time nanny, it doesn't matter kind of, they're technically under the law would still be your employee as far as that's concerned. The rule for it again would be they would have to meet that $1,000 before they in a calendar quarter to become covered or reportable to us, in that the domestic employment covers anybody in the home basically that you hire first. If you hire your neighbor's lawnmower or kid to mow your lawn, that could be a potential person that meets that type of coverage in that.
Coverage, right.
And so, yeah, it's not about kind of a nanny is someone providing services. So yes, we would consider them possibly, whether they're part-time, full-time, doesn't matter to us. It's a matter of the dollar amounts that get paid in that. Okay. Is there another?
Yeah, one more. So we are a manufacturer. We have someone who we pay for installs. They have their own business, and that is who we pay. Do we need to include them? And then they followed it up with, it is not often that they do an install. So
with the limited facts that I've got, would you need to be required if they don't pass the test? Then you would need to report them to us. If you don't have any facts backing that up, you would need them to report them. Now, if they meet those criteria and they're not economically dependent upon you in all of that, and they in that, unless you can control them in their behavior to do the work. And one thing I will kind of, and I don't know if I mentioned it or not, but in control, we don't look at the end result as control. We look at the way they do the work. So how does the work get done? Customers often do the control of what they want in their home. We would look at, say, in an install on flooring or something like that, is do they have to go from left to right, back to front in that, and that's your requirement. You're requiring them to do a very specific process in it. Now, if they contracted you to do a star pattern in the middle of all that, again, that's the end result, not how to get to that result. We would look at kind of that behavioral aspect of things. So hopefully I answered that question.
Actually, another one just came in. So in a domestic employee situation, the homeowner or person paying, would they have to open an unemployment account and file returns each cycle? So I'm assuming in this case, they're paying more than the $1,000 each calendar quarter. So this person is an actual employee in a domestic situation. Do they have to open up?
So yes, if they pay over $1,000 in any calendar quarter of that year, they would have to open up an account and then have to report each quarter to us for the amounts paid to those individuals that meet domestic coverage, which can be, and again, anywhere from a nanny, babysitter, to a cook, a landscaper, a butler. Can be very many different things, but yes, they would be required to open it up.
Yep.
And report to us.
Okay, that's it on those for now.
Okay, so I'll move on. So corporate officers, they are employees by statute. So the IRS actually defines them as an employee, and because they are covered for, our law says if they're covered for FUTA, they're covered for SUTA, they are required to report wages to us if they that we'll get into some of this in a little bit, but unless they opt or exempt themselves through a form. But so yes, and they are required to do a lot of it. We are in all of it. They're allowed to elect that exemption, like I said, but they do need criteria to do that. Do that, but I'll explain kind of who can elect to exempt. Under a public company and a private company, they both have to be a bona fide corporate officer in it. The primary responsibilities for a corporate officer do not include manual labor in a public company, but in a private company, they just have to be a corporate officer in control of the performance of manual labor. So they don't, they have to control the daily management of it, basically. Both have to have, they have to be a shareholder. That does not mean they are an owner of it. That means they're an actual shareholder. So if their names are not on the actual listed piece of that shareholder. So we look at, a lot of times in this day and age, they don't actually give out paper shares anymore. They do it. So we look at the K1, and if their social security isn't, or security number isn't getting we do not consider them a shareholder in that. So we do look at that. They might own the shares, but they are not a shareholder, and our law requires them to be a shareholder. In that, and they do have to exercise substantial control of the daily management. If those things aren't met, then they do not meet the exemption and they cannot opt out. So if they have opt out, you would want to contact us and we can get them back in, or I guess in some way, shape, or form, sell them shares in it. They just have to be a shareholder in that. And applications for the year are kind of set. We have to receive them by March 31st to be effective for the current year. So like in 2024, if we didn't receive it by March 31st of 2024, we couldn't do it. If they were one day late, we weren't able to do it. You're not able, because we can't put them on the system. And how we receive things is a postmark date of an envelope. So if you're going down to the post office and you want to get it stamped to make sure it gets postmarked on that date. Also, if you just put it in the mail and it doesn't get postmarked for the next day, we don't receive it. We don't receive it till the date it gets posted. So you want to make sure, whether you're reporting for quarterly reports or this, that you make sure it gets in on time. You can submit things through our to our fax lines, and there is one on the form itself, but you would want to basically make sure you keep a facsimile of it, especially when it's close. If we don't get it for whatever reason, at least you have a record that you sent it to us. Our employer portal actually date stamps everything, so we can do it, so you can send it through there as well. That is your right, because the reason this becomes important, I'm not sure, is corporate officer wages. If people don't want to report to us, they would need to exempt themselves, and there's reason to do it. And I would say go talk to your accountant. They're the ones that can best understand for your situation for whether you should report to us or not, because there are some FUTA downsides to it where you'll pay them a little more if you don't meet the calculations that they have for it, because you have to pay FUTA timely and accurately for SUDA as well to actually get their credit on their form, because their form is actually at like 6.2% of the gross wages for up to $7,000, but you get a 5.4% credit for paying us timely in all of that. So may or may not be worth your benefit in it. We're not the experts at it. We can't advise you on it. All we can say is it may or may not happen depending on your payroll in your company. So again, kind of what are corporate officer wages in this? Well, we look at kind of what wages are is anything in exchange for services. We view it as that. It can be anything that you get paid or they get paid. So it could be distributions, draws. It could be personal expenses being paid out of the company. We look at if they're providing a services, what kind of services are they performing? And so we kind of figure all that out. And so we can kind of define what they're actually doing for the company. Then we look at how much time is spent performing services and what's actually going on. Every employee of a corporation is technically supposed to kind of keep track of their time. We know that corporate officers, especially of smaller companies and everything else, don't, but it is their responsibility. So we try to do our best with the information we have or can get in all of that. But we do look at that. What do other people get paid for the same or similar type of services in what they perform? We look at the going rate for similar positions, which we actually find at from our economists, which are at the lmi.idaho.gov. They are the occupational wage survey. And so we look at what they're performing in the area. We usually start as low as we possibly can and in region. So what that means is if it's a city, we would start probably in that and then move up to like the region area. And if not, we move up to the state to try to figure it out. We try to do our best trying to find kind of what it is, because employers technically should know what they're paying their officers and why they're paying their officers prior to the year even starting. And so we would ask kind of what is going on in that, and we would see, is it reasonable? Are they receiving a reasonable wage for the services they're providing? If they're the CEO of a corporation and they're getting $7,000, maybe not, depending on how much time they're actually spending in the company and actually doing work. So we do look at it all. We try to evaluate it, but they are required to pay all expenses, which include their officers' wages prior to paying themselves distributions and dividends and that. So, and here's kind of what we look at in all of it: draws, dividends, personal payments, bonuses, rents, and loans. Loans are tricky. Just so you understand it, a loan actually has to meet the qualification for any type of loan, even if just like you were getting it from a bank. So it has to have interest and a payment schedule, a repayment on demand. All of the things that you would get from there should be in a loan that you're giving from the corporation to the officer. So, okay. I'll stop there for a minute because they go well together, but are there questions on any of that or from backing up at all?
Yeah, there are a couple of, let me go back up here. So we contracted with a paving company to patch holes and seal coat parking lot. Contractor does not carry UI for his crew and claims that they are independent contractors, and he is not required to carry UI on them. It looks like in a recent audit, they were charged to cover his crew. How do they avoid this in the future?
Well, that's a good question. Trying to think of all the ways you possibly can. First of all, you can ask them if they're reporting for UI up front. You can get their workers' comp, keep their business cards. Did they bid for the job? Are they using their own equipment? You would want to gather all of those kind of facts up to kind of see what is really going on. And if they're not, in your opinion, you would want to report them if they don't meet that exemption. But it does get a little tricky because you're paying the one person for all the work. But if you're paying his workers directly, it could be a whole different matter, kind of a different topic. But you could be chargeable in that if you don't have enough evidence to support what they do. So how you got a hold of them if they're doing stuff on Facebook or in that, if you have the right to direct and control them in the performance of their work, it's kind of a done deal in that you're going to have to report them. And again, it's not the end result that you're looking at. It is that behavioral process of it. And if you can control them or have that right to control them, then it would be that. That's a very complicated answer. So that's what I can give you at this point.
Is there a corporate officer exemption for nonprofit organizations?
No, I don't believe so, but I'm not 100% sure about it. I don't believe there is, but I would have to make sure of it because it doesn't happen very often because they're not a shareholder in all of it, but I would have to look.
Okay. Is it possible for a company to be listed as the sole owner, or are officers required to register for SUI tax account number in Idaho?
So if it's a publicly traded company, they would want to put at least several of the officers, the president, CEO, or the CFO, and that. The reason that would become important is because if someone called us up and needed information, we wouldn't know who to give it to, and so they can't do it. But it does happen that the company does the whole 100%. But if it is a S Corp or those partnerships, sole proprietors, they would need to give the officers or owners of the businesses for that.
Okay. Several questions out here. Do you have to renew the exemption every year?
No, once you're exempted for a minimum of 2 years, but it continues on and on and on until you elect to reinstate yourself as covered. And there is a form for that as well on our website to actually do that.
Yeah. Okay. Let's see here. Okay, so that one they answered themselves. Can you explain the extent of controlling with something such as the previous example of paving a parking lot? What would be considered controlling them?
So let's see. If you required them to show up at 8 o'clock and do the job, if you required uniforms to be or worn badges saying your name, or the way they do it, again, kind of the flooring a little bit, is there a specific procedure how to address that parking lot? Did they have to lay tar or pavement down from north to south, east to west? Again, whose equipment are you using? And in all of it kind of helps that control a little bit. Do you require them to turn in time cards or statements. Can you tell them to get off your job site? In all of it. Now, again, one factor or one little fact isn't going to change the overall scope of it, but that's a pretty much a majority of how is it really looking as controlling in that. It can come to schedules. It can come down to if there's a supervisor who can say, hey, pull up your pants. It's as simple as things like that. But again, it's a majority / what is really going on in that aspect of things. So controlling is, again, not the end result, because the end result is it's going to get paved or tarred, and then lines are going to get drawn on it. We know that because there's going to be a certain agreement from the customer on how they want that. So that's an end result. But, if you have to use paint in that, what type of paint do you use? If there's you like the special brand a little oranger than the one that's standard out there, right? Or there's tar brands that you have to specifically order from it, and you're requiring them to use that. And how are they controlling those employees or workers out there on the job site? So it really depends. It's kind of what's going on. It's a hard example to give. Control is kind of, do you have checklists to do jobs, or do you require them to check in at the end of the day, check in but the prior part of the day? It all comes into focus a little bit. So I wish I could give you a great example, but control is kind of that right for, do they have that ability to work free from you, is really what it comes down to. All right.
Okay. That's it on those.
Okay. Let's see. So what are wages? We've been staring at this screen a lot of minutes, but in it, it's basically payments made in exchange for services. That comes down from hourly pay to salary, some piecework, commissions, dividends, vacation, or idle time is how we put it in the law. Bonuses, prizes, gifts in exchange for those services. Some room and board can be considered it if you are giving them room and board and that's part of their agreement is to do that. That can be considered a wage possibly. Any excess travel or business expenses over the actual expenses can be considered wages. Undocumented reimbursements, we still have tips in our law, so it has to be reported for us in it, in all of that. And so basically it's just anything in exchange for services. And in it, if you're paying people's personal expenses, there can be, if you're giving them product in exchange for those services, it can be considered. We'd have to look at the fair value of those products, but depending on what's going on, those could be considered wages in all of it. It's pretty broad in that regard. One thing I'll mention is these are some exemptions from wages. If there's an accountable plan, requires the employee to substantiate to the employer any of their business related expenses, because there must be a business connection to the expense. They must account for it adequately within a reasonable time period, which is about 60 days. And then any unused funds or anything in excess of that actual expense, they do need to return to the employer in all of it. Because say you round up, and employers do like to do this, because they don't want to write a check for $58.75. They write it up to $60 or even or $59, that 25 or 25 cents or $3 or $2.25 becomes a wage to that person because it was over the amount. So even if it's a penny over in that rounding error, it could be considered a wage. Cash, as far as everything is concerned, is not de minimis, which means small in nature, which seems goofy, but that's the law in it, is they would have to report that extra amount. So be careful of rounding up because technically that is part of their wage. So what are doing direct expenses are usually one of our big ones in it. Yeah, so they just need to require receipts and kind of write what the receipt were, what it was for, if it's not on there, and the business connection. Make sure you keep those in it. Then our second kind of is what they call per diems. So you can give people mileage per diem for using their personal cars. You cannot give it for using the company car in it unless you're just considering that part of their wage in it. But mileage per diems to use their personal car would need, again, the business purposes, typically where they went and what date they went there and the reason for it. So you'd want to make sure you're keeping the mileage that actually happened on Google Maps or I guess Apple Maps, however you want to do it, showing the mileage, but you want to make sure that you show the dates and the reason for those travels to actually be usable in an exempted amount. So meals per diems are a little different. If you're giving someone a per diem for a meal, if they're not in a period requiring rest, that per diem is actually part of their wage and is required to do it or to be reported to us in it. So what that means is if they go from, say, Boise to Mountain Home or Twin Falls, and then come back in the same day to their base period or base of operations area, tax home technically, and they would be considered not in a period requiring rest, and that per diem of whatever you gave them needs to be reported. Now, if they go overnight and they stay, then that would be in a period requiring rest. The reason it's not said as a period requiring rest is because truckers fall into this example as they sleep a lot during the day. So they don't always sleep at night. And so that's why it's kind of vague in the period requiring rest. It's usually about at least 8 hours of rest to be considered in that. And that's it. They can't just pull over and sleep for 5 minutes in their car, and that's that. But so we would look at that in all of it. And then there's travel. You would want to make sure the travel dates, again, the business purpose of the travel, where they went, and that. So if they're going to like a conference or something, you would want to keep that at least part of the conference details to it. A flyer worked for it. As long as everything's attached to it, it would kind of help qualify for that business expense reimbursement and not being part of their wages. And one thing I will mention is you can never, or you can't go over the standard amounts for these types of events. Otherwise, the amount over and above the like mileage or meal travel per diems and will be considered part of that. So they have to be less than the federal per diem rate for those events. And everybody and different places are different. So checking the website of gsa.gov for the current rates, because they do change every year. And you would want to go there and make sure you're doing that. amounts to include, I think we kind of covered this. If you're not requiring any documentation, it's a wage and it needs to be reported for SUNA purposes. In that, any amounts in excess again, and whether it be actual or the GSA per diem rates would need to be reported to us. Okay, is there any other questions we have for before I move on to the simple?
There was, does having an independent contractor provide a no employee workers' comp certificate enough to have on file to take the liability off of yourself? So if I'm reading that.
So if I understand that correctly, what you're saying is does it meet the test? No, it only has the ability to provide a fact. So that's one fact out of many that would help prove that. Now, because we look at a lot of things. We look at Secretary of State. How did they file it? We have had employers in the past say, oh, I won't let you do it or work for me unless you have workers' comp and a registration with the Secretary of State. They walk them through it. We've had even employers sign the SOS. And so it all depends on what's going on out there, because we have to look at, again, substance over form. So what is truly going on? And I'm going to tell you right now with the independent contractors, when they want unemployment, they're going to come in and tell us everything because they want to get benefits in that. So the best you can do is, if they're acting like a business out there and they're advertising it, most likely they're going to meet that test. If they're someone you advertise for an application to do the job and you're saying, oh, you have to be an independent contractor, it may be variable in that. So I can't say one way or the other, but that's how it goes typically. So yeah.
Another, we upload quarterly reports with CSV file. Works great for amount of employees we report on. Will the upload ever require hours on the employees?
There is no plan to make that a requirement at this point in time. Can't say it'll never happen, but there hasn't been any discussion for the foreseeable future that we are going to require the hours to be included in that. So, okay.
That's it for now.
Okay. Quarterly report due dates. This is always good for us to mention just because these due dates are very, very important to everything, because if they're not filed, if reports aren't filed, it could cause potential civil penalties and potential late payment penalties. And those are two different things in everything. And so we look at kind of April 1st or 30th, July 31st. So the quarter actually ends on let's start with the first quarter, March 31st. But all reports are due the month after, by the end of the month after. And so the first quarter is due April 30th. Second quarter again is June 30th, and file has to be filed by July 31st. Third quarter has to be filed for the due date ending September 30th by October 31st. And the end of the year, which is has to be filed for that fourth quarter, has to be filed in January 31st. In it, things we'll note a little bit is if it falls on a Sunday or Saturday, Sunday, it actually is due the next business day. So because we give that extra day just because the due date falls on a time period where you cannot mail it. So you get one extra day if it falls on a Saturday, Sunday, or a holiday, or two technically if you're Saturday. But yeah, so we need those reported because again, it does cause some grief in it. And I don't know if in that. So record keeping, who must keep it? Everyone. So what are you required to keep? Time cards, wage information for all workers, your quarterly reports. Things are going a little more online. And in all of it, so we look at kind of all of this and kind of say, hey, you know, what is required in this really is to protect yourself from someone being reclassified because there's not enough documentation there. We do look at it and say, hey, what's going on and what happened to this person? And if you don't have like their information, we have nothing to evaluate, and we're required to do what the law states. So it does get a little problematic in that, in everything. So loan documents, lease documents, evaluations, I would even say independent contractors in all of it. Typically, we require for SUTA purposes at least 5 years, because we can audit 5 years back if we have to or need to. And that goes for everything from benefits to us in tax. So 5 years is the minimum you'd want to keep it. The IRS has a different standard. They can go back to 7 years, but at the same time, we're not them. We don't require. They have a few other requirements that you might want to contact them if you want to know how long to keep the records for them. But for us, it's 5 years in all of that. Oh, and here we go. So are there any questions before I go on?
Are there penalties for late reporting? Are there extensions possible?
So yes, there are possible. Well, yes to both of those questions. There are penalties for reporting late. First of all, you could potentially get a civil penalty. And I say could, I'll explain that in a minute. But late payment penalties are, if they're not received by that due date, there are a late payment penalty of $20 for each month that it's late, or 4% of the tax due, whichever is greater. So late payment penalties come, you're 1 day late. If it says it's supposed to be due April 30th, and you report it or postmark it on May 5th or 1st, and it's not on a weekend or one of those types of things, it would be considered late, and we would be required to actually do it. Is there extensions? We do give extensions for circumstances out there. We can extend it usually about 15 days-ish, depending on kind of what's going on with the employer. We do that. They would, you would have to call in and kind of tell us about what's going on to get that extension. You can't do it online. You could do it through the employer portal through a secure message, but in this time period right now, we are going through a reorganization aspect of things. So we are hiring a lot more people to catch up for where we should have been. And so the employer portal is still a good one because it registers it, but I definitely would follow up with a phone call to make sure, are we going to do it? Because we don't do it always. We do it for if something's happening, for like computers went down or crashed or got a virus or you can't get into it, fires, damages, where you need a little extra time, something's going on. So you don't just get them just because you need them, but can ask. Can't say everything's going to be, but we do grant extensions. Okay, is there any other questions?
Would you please take a moment to quickly review the requirements on reporting new employees and what is required?
I think I'm going to get to that, so I will do that. I don't want to get too higher or too, otherwise I'm going to say it all now and won't do it later. So,
Right.
But I will, yes.
And just so everybody understands, we do realize that we are up against our time limit. This is being recorded. So if you have to leave, know that the recording will be, a link to the recording will go out to all those that registered. So apologize for that, but just want to make sure we get through all the information.
I'll try to speed up for you. So our employer portal is located at this website. It's that you can get through it through labor.idaho.gov or www. And there's a login button in the upper right hand side of the screen. If you hit that, the lower right says pop-up says log into employer portal. We do have a user guide, so it is all in there. And it is pretty good in it. Most people don't know it's there. So you can do it again. You can do it through the pay or in that, or here's that what I was just talking to you about. Into that login to employer portal, get here. This is how you'd log in. If you're doing an IBR, just to mention that, you would need to go there to do it. This is not the place to register your business to be reported. So a new user, if you've never been on here before, would need to go through this process and click on it. And it'll just ask for your username, or which will be your email, and a password in your name and contact information. So if you forget password, you want to click on this button. It will send you a link. Little notation in this is to understand that if you hit this button and you're in Edge, you need to make sure that when you hit the other link, it pops back up in Edge. We have a glitch in it and it won't save your updated password. So you just want to make sure that that's possible if that happens. Hopefully in the future that changes, but for now, not. And once you get in and you get into your company information, this is what it's going to look like. You should have about 8 tiles up there, depending on what permission levels you have. This is an administrator view. And so we would look at that. In that, if you need to update the user, it's in the upper right-hand side of the screen. You can hit that and you can change emails in that area. You can change your name, phone number, and that is on page 33 of the user guide. You can change selected employer if you need to. Or you can actually add selected or change. So both of those two things will allow you to either add a new employer, because you can have multiple employers under one user. Users actually access the employer's account. So they're 2 separate things in it, and you can have multiple. I think someone actually asked this earlier, is you can have many different people on as a user in this. They just have to go and add that. Secure messaging allows us to actually talk to you, and it never leaves our mainframe. So we can send you documents like if you had to have a tax rate notice because you didn't get it and you needed it, then we could send it directly to you through this means, because we're never actually leaving our site in it. This is where you would go to report UI tax reporting and payments in it. And again, the page links are in the user guide are all there. New hire reporting. We'll get to this a little bit in a minute, but this is where you would go to actually report your new hire. In that, the benefits area is actually kind of neat. You would can actually see, well, as real time as we can get it. You would click on this and you can actually see who's claiming benefits against your account. It's about a 2-week to 3-week lag, depending on what's going on. But you can actually see in that time period, is someone actually filing against you as an employer? Did you miss something? Did something go on? You can also see past benefits per quarter if there's a selection to do that. Again, that's on page 32. It'll help explain that. You can at least address the addresses. Again, we'll probably most likely look at it. The administrator tab is neat. It has your PIN in it. So if you're the administrator and you need someone to have administrator rights, you can go in here and it's a manage your PIN and do that. E-sides is a benefit response. It's not actually housed here. There's another way to actually get into it, but you can get to it from here and it should take you to that area. And you would need to, that's how you would respond to benefit claims, is through that site. And all of that. UI tax reporting and payments, if we hit that, I guess we're going to manager authorized users this time. So in this, you can see how it kind of looks. You can actually edit them. You can delete stuff off of them. So if you didn't want them to have administrator approval, because administrator approval automatically gives every approval out there. So you could take that one away and say manage UI tax filings and just keep the maybe view benefit charges, because that's their job. In that, you can actually remove them by just selecting that remove button on the left-hand side in all of it. There's also manage your PIN. This is where you would get your PIN, that block, since we don't show people's PINs. You can get it right there. You can reset the PIN, which if you had a bookkeeper or somebody that had access to it and you didn't want them to have access to it anymore, this is the best place to do that. And you can do it all yourselves, or you can call us up, we'll do it for you. But, it's usually simple that way. So in this, the employer portal, if you go to the UI tax reporting and payments, this is the screen you're going to get up. The bottom left kind of shows what's going on with the account, and the right side says the next step. So you can report next quarter, which if you see in the kind of banner above it, it says available quarters on the right-hand side. The one that's available is the one that you would with the next one you're going to report. So this is an old screen, but still the same. You can make a payment and then edit any employer information. So you can't edit some things from this side. Again, we take a look at it. We don't just let things change on our system, because so how this is, if you say report next quarter, if you had people reported in there already, it's going to keep all of this in there, and you can just put the wages in and do that. If you have a new person, you would see that top line in this. You would fill that information out and then have to select add the action button on the right hand column to actually add them into the list of things. So there we go. So do this, and then you'll see the total wages kind of down at the bottom a little bit. It should say the amount of wages that were actually entered into the system a little bit. And then when you're done with that, you'd say finish reporting wages and or save, depending. If you're not done, you can save it. Or if you need to start over, you can say remove all, but that's not a typical one. Here's where the totals from the other side will come in. That's the total wages reported. If there was any excess, it would be right below it. And then the taxable wage amount is there. If you had any excess wages that needed to be adjusted because you had reported someone to a different state in the prior quarter, and that can be used to help calculate excess wages. If you hired them from a different company though, or from one of your other companies, then that wouldn't be, it's just for that employer. Then your tax rates and unemployment would be down below in the tax summary. And the tax rate, remember that in down there to report the number of employees, you would have to include all employees that's paycheck included the 12th day of each month. So in the first month, you would have to put, if it included that, 5, 5, and 4, depending on your variable of how things went. But you would want to, it would have to include that 12th day of that month. If they were in that, count those people, and that's the amount that should be reported. Then you would hit submit tax filing, and it would come back to the main screen just like this, kind of showing in all of that. So here's kind of that late payment penalty. So I kind of got ahead of myself a little bit. So just reiterate it. Remember, it's 4% of the tax due or $20, whichever is greater. And for each month that it's late. So even if it rolls over 2 months into there, then you would have to do that. Here's the civil penalties a little bit. So failing to file, our system automatically gives out civil penalties in all of it. And so we give out a warning letter if you've had 2 late filed reports, and one of those is in the most previous of the 2 quarters, or of those 4 quarters, the most previous 2. And then you would get a warning letter. So we give out warning letters each month. And then if it isn't filed timely by that, we give that penalty automatically. Our system just does that. We don't do it. The law actually reads that if you fail to report by the due date, then you can receive a civil penalty. We try to give you 2 warnings to file it, and so we can get through that. But first offense is $75 or 25% of the tax due, whichever is greater. And then it jumps to $150 for the second occurrence, or 50% of the tax due. And the third time it happens, it's $250 or 100% of the tax due, whichever is greater. So, and once it hits that third, it takes about 4 years to start falling off to get that first offense again. So realize that once you hit that excessive amount, and it's just for not filing the report timely. If you guys have problems with anything, let us know. We can help at least a little bit out. And if nothing else, we'll work with you on getting it done, but you can report. And then if you have to get it paid because you're having some shortfalls, you would want to contact us, let us know that. We can help work on that as well. But not reporting it causes these events to happen, and we want to keep you out of those as best we can. So if nothing else, report and then contact us and see how best you can handle the payments and stuff, and that to get it all due. New hire reporting, since someone asked, here it is. It is mandatory that it's reported within 20 days of the hire. And they do need to, if you terminate them and 60 days prior, you do need to kind of report them. So if it's prior to that, you don't have to, but if it is, doing it. And if you, in worst case, is just report them if you are in doubt, and that makes it simpler. This really is to help prevent our trust fund and some other benefits to being incorrectly issued to these people, because for unemployment purposes, it is kind of, they are allowed to work some during the week that they are receiving benefits, but if they work full time or they pass their threshold, then required to, they wouldn't get anything for it. But but it's also to help other agencies out in that. Is that it? I think we're done. So is there any questions after all that?
Just one last, well, maybe a couple. Is there a penalty for reporting new hires late? So after the 20 days?
So right now there is no penalty for it. It's just a mandated requirement.
And I would just say in response to that, going back on a statement you made earlier, Eric, that that requirement really is partly there to protect you as employers, so that individuals that might be filing for unemployment, if they are hired and start working, that helps us receive notification of that. And so if you don't report them, there is a greater likelihood that a person can file or continue to file unemployment maybe when they shouldn't. And so it just helps us catch those types of things. So the penalty might be that it doesn't protect the overall system well. Another question, we received notice rehire reporting must be done on-site effective in last month or so. Oh, thank you for reviewing it. Okay. So there was a question, how do we report new hires? And again, I think there's two basic ways you can do that. Through the employer portal. You go ahead.
Oh, no. So it is through the employer portal. You can do it through there. Our website does have it. You can also, if you don't have access or having trouble with that, you can fax it into us or send it through the secure message area with a copy of their W-4. Just make sure you put the employer information at the bottom of that W-4 so we can attach it to the right accounts and understand what's going on in that. But yes, there's multiple ways you can report it.
Do we have to report the termination of an employee or only a new hire?
So only a new hire at this point. You can use the sides information area to report the termination prior, just to help make sure that the issue with that worker or employee gets addressed properly in that. But you'd have to go through the sides count because the employer portal is mostly for tax. We don't look at the benefits area very often. Okay.
Does the Idaho Department of Labor require separation forms when an employee is discharged or quits that includes the employer's SUI tax account information to provide assistance during the UI claim filing process?
Say that again.
So does the Idaho Department of Labor require separation forms when an employee is discharged or quits that includes the employer's SUI tax account information to provide assistance during the UI claim filing process?
It should not, no, because we shouldn't have. I mean, it might come with that, and depending on if it's the department straight to the employer, we might have that on there. We don't. You'll probably attach it to your account when you go through sides. In that, I haven't done that. I don't have access to that sides information, but it usually will come with information pertinent to you and only to you. We wouldn't send that to the claimant portion of it. So at least your account number, because that's PII, and that individual wouldn't need to know that portion of it. But we would want to attach it somehow to an account if you were doing it through sides or whatever.
what do you do with a paycheck a past employee never picked up?
So unfortunately, I don't have the the authority to say that. That is a wage and hour potential issue in it. I do know you would want to notify them if they don't come in and what to do with it, because they should have access to it if it's within a reasonable period of time. But I don't know the details on that information, so you would want to contact our wage and hour unit for that.
Yeah. Just clarifying, required information for new hire reporting is name, date of hire, and employee address.
I would assume you need the social security number to make sure we have the right person in there would be so including that, yes.
Yeah. Okay. Oh, and then somebody, Idaho unclaimed property for paychecks not cashed if you cannot reach the employee. Yeah. And I would just encourage, before you even go to Idaho unclaimed properties, that, also check in with wage and hour just so that they have documentation of that. So I think that is all of them at this point. Again, Eric's contact information is there. Also, there's contact information on the website, labor.idaho.gov, where we can be contacted, either our local offices or any of the additional departments that fall under the Department of Labor. Please don't hesitate to contact us should you have questions. You can also contact your local office or closest local office with questions.